Warren Buffett isn't just known as the Oracle of Omaha, he's arguably the greatest event-driven investor of all time. He made billions not just by holding great companies, but by stepping in at moments when events reshaped the market. Let's walk through some of the most famous plays. Back in the 1990s, Buffett quietly built a stake in Capital City/ABC. Then in 1996, Disney came in with a $19 billion takeover. Buffett didn't just cash out, he took Disney stock in the deal, turning a $17 a share investment into billions. It was merger arbitrage at its finest. And as Buffett likes to say, our favorite holding period is forever. Fast forward to the chaos of 2008. Wall Street was burning and Goldman Sachs needed cash. Buffett wrote a $5 billion check on his terms, 10% annual dividends plus warrants to buy Goldman stock cheap. 2 years later, Goldman repaid him early and Berkshire walked away with billions in profit. Buffett later quipped, "Every day that Goldman doesn't call our preferred is money in the bank." But Buffett's event-driven moves weren't limited to bailouts. In 2012, ConocoPhillips spun off Phillips 66. Most investors shrugged, but Buffett saw value in the refining business. He quietly built a massive stake, and it paid off handsomely as the market revalued the spinoff. He repeated that playbook in 2014 when GE spun off Synchrony Financial. While others ignored it, Buffett's team grabbed shares in a strong credit card business that complemented his American Express bet. Synchrony delivered steady returns and dividends for years. In 2016, he moved on Sears. That's right, Sears. When it spun off Seritage Growth Properties, Buffett bought in. The REIT had rights to redevelop old Sears stores at much higher market rents. Just disclosing his stake sent the stock up nearly 20% in a single day. That's classic Buffett, spotting hidden value where others only saw decline. And then came oil. In 2019, Occidental Petroleum struck a $38 billion deal for Anadarko, and Buffett helped fund it with $10 billion in preferred stock. When oil prices crashed in 2020, people thought he was stuck. But by 2022, with oil surging, Berkshire's Oxy position ballooned into one of his biggest energy bets. It's a reminder that Buffett doesn't just survive downturns, he turns them into windfalls. Across mergers, spinoffs, and crisis financings, Buffett's strategy is clear. Buy when others panic, secure favorable terms, and let time and events do the work. He doesn't just buy when others panic, he buys when big events happen. Or as he likes to say, be fearful when others are greedy, and greedy when others are fearful. Warren Buffett's track record proves that great investing isn't just about spotting quality companies. It's about recognizing the power of events. From mergers to bailouts, from spin-offs to commodity swings, he's built a fortune by stepping in when the stakes were highest and structuring deals on his own terms. The lesson is timeless. Events reshape markets, and those who understand them can turn risk into reward. Buffett mastered that playbook, and it's why he remains the greatest event-driven investor of all time. Warren Buffett built his fortune by stepping in when events reshaped the market. From bailing out banks during the 2008 crisis to betting big on spin-offs and restructurings, he knew that the real money was made when events forced change. That same principle powers Levelfield's AI. Just like Buffett, activist investors take big stakes in companies and push for layoffs, buybacks, or leadership changes, moves that often send stocks surging. But here's the challenge. Not all activists succeed. Some pressure companies without creating value. That's where Levelfields comes in. Tracks only the top-performing activists with a history of driving shareholder gains. Scans 30,000 plus documents per minute to spot new activist stakes the moment they're disclosed. Alerts you in real time so you can buy in before the crowd reacts. Take Salesforce as an example. When multiple billionaire activists piled in, the company cut costs, restructured leadership, and launched a $20 billion buyback. Within 4 months, shares jumped over 50%. Buffett called it being greedy when others are fearful. Levelfields calls it an activist investor alert. Now, you don't need billions to trade like Buffett. With Levelfields AI, you can follow the same event-driven catalysts that move markets: activist stakes, CEO shakeups, buybacks, FDA approvals, and more. Follow and subscribe for more. Levelfields Elite Investing, Effortless AI.